In this video, I'm going to go through the second part of the solution to Nogood Co, and this second part refers to the bullet point items which describe a series of errors which I just briefly referenced in the first video on this solution. These bullet point items typically are much more challenging to deal with than what I demonstrated in the first video. And the reason for that is that they can encompass a great range and great variety of different types of errors. So you need to have a very thorough understanding of debits and credits and accounting processes in order to be able to solve them. So hopefully by the end of this second video you'll have a better understanding, but I do suspect that it will be important to go back over the video a couple of times in order to ensure that your understanding is as complete as it can be. So looking at the details of the errors. In the course of your examination of the nominal ledger, you discover the following additional errors. So the first one, net credit sales had been omitted from the sales account for the month of August 2019. The gross total, including VAT at 23%, was 12,300. The VAT and gross amounts had been correctly entered in the nominal ledger. So if you're attempting to figure out how to solve the problem that this describes, the first key piece of information is that this is referring to sales on credit sales. So that hopefully would prompt you to think of the sales day book, which is where we record our credit sales. Remember, cash sales was going to the cash receipts book. So credit sales go into the sales day book. So just to show the refresher how to deal with sales day book transactions. This is something that we would have seen a lot of in a previous semester, where we enter up details into different day books and then post totals to various ledgers. So the one we're looking at here is the sales day book rule. So this shows me that the gross total should be a debit to the debtors control account. The VAT total is a credit to the VAT account, and the net sales amount, and this is something that we need to focus on here, should be a credit to the sales account. Okay, so there's a debit to debtors and then credits to VAT and sales. Let's just go back to the question. So it said that the net amount had been omitted from the sales account, so there was no credit at all to the sales account. The gross total was 12,300. The VAT and gross amounts have been correctly entered. So our concern is with the sales account. So I'll do a working here to figure out the solution here. So this is the sales account. Now we need to deal with the net amount. We're told the gross total was 12,300, including VAT at 23%. That's sufficient information to figure out what the net amount is. Again, this is something from semester 1. But the gross amount divided by 1 point the VAT rate will give you the net amount. So to work out the net amount, gross amount is 12,300 divided by 1.23 is the VAT rate, so 1.23. So you'll have 12,300 divided by 1.23. It works out as 10,000. Now what we want to do is we want to put it on the credit side. Okay, but we did nothing. We left it out. So there wasn't anything to cancel as such, but that is something that we're going to have to do. So I'm just going to highlight that because we're going to need later to post a credit to the sales account. Okay, so that's something that we will be doing in our journal entries, which you'll see in part 3 of this video series. Okay, so that completes that first one. Now, the next item, an opening accrued balance of €400 had been entered on the wrong side of the telephone and fax expenses account. Okay, so again, the issue here is that an opening accrued balance was put on the wrong side. Well, you need to be able to determine what is the correct side. And the magic word here, the big hint, is that this is an accrued balance. So again, this time using a different sort of set of rules, this dead click idea. Remember, dead click tells me debits for expenses, assets, drawings, credits for liabilities, income and capital. You should, if you're familiar with balance sheets, be aware that an accrued item is a current liability. So it should appear on the credit side of the relevant account. Okay, the liability always has a balance on the credit side. Now what we're told is it was put on the wrong side of the telephone and fax expenses account. Well, here's our telephone and fax expenses account. So we should have had €400 going on the credit side, but in fact what we did was we put €400 on the wrong side, which is obviously then the debit side. So we're going to have to put in what we want, and we're going to have to cancel this mistake. So these are the two things that we will need to do to this ledger account. Okay, so anything that's highlighted in yellow in the video part 3, you'll see the debits or credits being written out for each of these corrections. Okay. Now, during the year, a van was sold for €500 cash, which was €400 less than its net book value. It had originally cost €16,000. The only entries made in respect of this disposal were to debit the cash account and credit the sales account with the cash received. Okay, so this is a fairly involved transaction, but one little chink of light or one little glimmer of hope is that there was a debit to the cash account and credit to the sales account with the cash received, which was 500. Now, what that tells me is that the debit amount and the credit amount match. So at least there isn't a suspense account issue arising here. But there's a whole bunch of things that need to be done that weren't done, so we need to address that. So I want to just show the key tasks that typically must be done when you dispose of a vehicle. So we have to remove the asset cost from the vehicle cost account. Now, that doesn't appear to have been done because they only debited cash and credited sales with the cash amount, so they did nothing at all with the original cost. Remove the aggregate depreciation from the vehicle aggregate depreciation account. Likewise, that wasn't done, so that will need to be dealt with. And then process any cash received for the vehicle sold. Okay, they did process cash received, they debited cash and they credited sales. So it's at least processed in some form. Whether it's done entirely correctly or not is another question. So let's just have a look at the various ledgers. We need a vehicle cost account, a vehicle aggregate depreciation account, and we need a disposal account also. So the motor vehicles cost, motor vehicles aggregate depreciation, and the asset disposal account. Let's just start with these ones. So to remove an asset cost from the vehicle cost account. Okay, now again, an asset, if I just momentarily go back to dead click, remember an asset is something on the debit side. So to remove it, you would have to credit the asset account. Okay, so credit the asset account. So we want to do this. Okay, the cost of the asset was 16,000, so we want to do that. Now that wasn't done, so we will find that we'll need to make a journal entry to fix that. We also want to remove aggregate depreciation from the aggregate depreciation account. And again, from the previous video, aggregate depreciation is something that's technically known as a provision, which is a special type of liability. It's a future loss, a future estimated loss. So liabilities, they go on the credit side, as this dead click mnemonic tells me, credits for liabilities. Okay, so if they go on the credit side, we want to remove the value. So what we want to do is we want to debit the value. And again, we're going to have to do that because it wasn't actually done by us. And each of these needs to go into the asset disposal account. So this 16,000 is credit here and a debit there. And here the 15,100 debit here and a credit there. Okay, so we're going to have to deal with those items. And there's also the cash received. I'll just momentarily unhighlight that. The cash received of €500 was debited to cash account and credited to sales account. Okay, well, if I just momentarily go down a little bit here. Okay, so it was debited to cash account and credited to sales account. So we want €500 there. Now we actually did that also, and we want what we did was we did a posting of 500 here. Okay, now this is correctly done. We in fact did that correctly, so that was absolutely correct, that particular value. But we shouldn't have put the €500 to the credit side of the sales account. It should in fact have gone to the credit side of the disposal account. So we're going to cancel that error, and we put it in here, €500. So we need to do a debit there, and we have a whole lot of things to do in the disposal account. Okay, so all these wants or cancels, we need to do those. But this one at least was done correctly, so that's a positive, that at least one item was handled correctly. And that completes that particular transaction. Now you can see there's quite a lot going on there, but no suspense account arose in that particular instance. Okay, so just move these down a little bit further. Okay, so the next one then, the total of the debtors receipts column in the cash receipts book for December 2019 was understated by €100. So they added it up incorrectly. The value that they wrote in was €100 too small. The incorrect total of 13,500 had been credited to the debtors control account. Okay, well, we're talking about the cash receipts book. So again, just to go back to this refresher here, as the total of the debtors receipts column. So the cash receipts book, you've got the discount, the total receipt, the debtor receipts total. Okay, that's the figure we want. That should be credited to the debtors control account. Okay, and let's see what did in fact happen. Okay, well, it was understated by 100, but the incorrect total of 13,500 had been credited to the debtors control account. So at least they did put a value on the credit side. So what they did was they put 13,500 there. What we actually want is 13,600. Okay, so we're going to cancel the mistake there. Now, there are a couple of ways of looking at this. What you can see is that, in essence, we're going to add an extra €100 to this side here. Like, we're taking out 13,500 on the debit, and we're going to credit 13,600. So as the tip there shows, and I just show that comment. Sorry, I'll show that item. Okay, we could simply just say want €100 here. So ignore this and just put in an extra 100, which is the difference between these two things here. So just credit an extra 100 to the debtors control account would be a perfectly valid alternative way of handling that. Okay, that completes that item. Drawings of the owner totaling 12,000 had been credited to the staff salaries account in error. The corresponding bank account entry was correct. Okay, now again, so the owner took money out from the bank. Okay, that would be credit the bank account, and debit drawings is what should happen. So what we should have is we should have used debit on the drawings, €12,000. Okay, remember drawings, if I just momentarily go back to dead click. Debits for expenses, assets, drawings. So if you take drawings from the business, you must debit the drawings account. Okay, that's the accounting convention. Okay, so they should have debited drawings, 12,000. In fact, what they did was they credited staff salaries. So that was a big error. They put 12,000 on this side, which shouldn't have happened at all. So we're going to have to cancel that. Okay, I'm going to have to put in the 12,000 in drawings, and we're going to have to cancel the error there, 12,000. Okay, and finally, again, I'll just move these down a little bit. Okay, so finally, annual depreciation of office equipment, €3,000, and our vehicles, €20,000, total of 23, had not been entered into the depreciation expense account at all. The entries in the individual aggregate depreciation accounts were correct. Now again, something was missing from the depreciation expense account, and again, expense account is a key word. If something is an expense, what dead click tells me is it must go in the debit side of a ledger account, debits for expenses. So if something was missing from the depreciation expense account. What we want is 23,000 on that account, and we did nothing at all. It had not been entered into the depreciation expense account, so we're going to have to do that. Okay, so we're going to need to just make that entry ourselves. Okay, so I just highlight that. Okay, and the entries in the individual aggregate accounts were correct, so they did credit entries in those accounts. Okay, so what we've done in this session, in this video, is identified what needs to happen in the various ledger accounts, and all these yellow items we're going to do in part 3, the journal entries for those. So there's quite a lot of them. This is part 1 up the top here. You can see plenty of debits and credits needed there. So in the third video, I'm going to go through the individual journal entries for parts 1 and 2.